So if you're wondering who this nice smiling lady is in the photo, we're going to get to that in a minute. But the topic is newsletters, because they used to be all the rage when lenders, originators, and brokers were sending out high volumes of direct mail. And that was certainly the case for me in my experience in the early and mid 2000s. So I began to hear recently anecdotal reports that the newsletters are actually generating reverse mortgage leads, believe it or not. And so being intrigued, I've asked some of these individuals, well, what service are you using? And that explains the photo here we see of Claudia Loans, who's smiling here, and WordFlirt. So I decided to reach out to Claudia to learn a little bit more. And here is our brief interview, which was held just a few days ago. So I hope you enjoy it. And newsletters may be of value to you. Ladies and gentlemen, this week we have something different. We have an interview with Claudia Loans with WordFlirt, and you might be scratching your head wondering, what is WordFlirt and why is it relevant to me? Don't worry, we're going to cover those in today's session. Claudia, thank you so much for joining us.
Hey, Shannon, thank you for having me.
So can you tell us just in a sentence or two, how would you describe what WordFlirt does in the reverse mortgage arena?
Sure. So basically, we help reverse mortgage loan officers to grow their business. We use things like social media content, LinkedIn growth, and we do monthly newsletters. We do other things too, but those are the main keys.
Excellent. And what's really working, in your opinion, in digital marketing? I know that's a space that you watch very closely.
Yeah, and it's a big one. So I think right now, things that are very specific to niches. So, identifying your target audience and make sure you're addressing what they are looking for, what they're interested in. Being consistent. So instead of looking for those things that go viral, which is like 1 in a million, just actually showing up consistently. Education is a big one. Everybody seems to be soaking in education, especially in the reverse mortgage space, trying to get the myths all, taken care, or address all the myths that are out there still. And then using the content you have and repurposing it, those are like really important things that you can do once you put the effort out with your content to be able to repurpose it and use it on various platforms. So I think those are the main things.
So what types of services or products kind of encompass your digital marketing strategy?
So I think we specialize a lot in LinkedIn. That's like one of my main things, because I've been on LinkedIn since it actually started when I was a corporate recruiter back in the early 2000s. So I'm really big on LinkedIn for the loan officers, because you can really reach everybody you need to reach there. It's a professional platform, and people are there expecting to network. So building your referral network and adult children, they're all there. So helping people tap into that. The monthly newsletter that we produce is very, it's just probably one of our main services that helps our loan officers grow their businesses with their audience. And then content. I'm a creator. That's why I've been a writer my whole life, and that's what the WordFlirt thing comes from. And so I love to create content that hopefully addresses either issues or entertains or educates, all of those things. I guess those are our specialties.
Very well. Well, I took a look at your newsletters. Thank you for letting me take a peek under the hood that you've done for other reverse mortgage professionals. And one thing I noticed, unlike a lot of the email marketing I see coming from reverse mortgage or HECM originators, is it wasn't all just sell, right? Or all about the HECM loan. You've got a variety of content in there that actually builds value and perhaps makes the recipient who's getting it by email want to open it again. Can you kind of describe just some of the content that the homeowners or the professionals who receive the newsletter might find?
Yeah, so to your point, when I create a newsletter for a client, I put myself in their shoes, and I think, okay, I want people to want to open it, to want to read it, to look forward to receiving it. And so in that case, it's going to be a combination of content. There is always educational content in there. We do personal things relevant to the time. So for example, We have our June newsletters going out here soon, and they'll be about Father's Day primarily, helping dad utilize the equity in his home type of thing. But also build around that, what are 5 things that a father can do with the equity he gets out of his home, Juneteenth, grads, like we focus on things that are in people's lives, like it's relevant to them and their lives. A lot of people enjoy getting like a recipe of the month, so that puts a little fun on it. Maybe putting in something locally to that loan officer. So like, for example, I live in Northern California, so maybe there's a volunteer organization that I might highlight, or events that are happening, festivals and stuff like that. So we really customize it to who the loan officer is trying to reach, because a lot of times it's not just the consumer, and sometimes it is, and sometimes it's just the referral partners like financial advisors. And so I work with them to make sure that we're kind of handling both, if it's both, or in making it more specific to the consumer or referral partners. So it's they get hands-on in their input as to what's going to go in there, but then we do all the work. We create everything for them, and they hopefully just review it, and we hit go. Boom.
And are newsletters still worth it or relevant? Because, back in the day, I would say, probably about 2003, myself and my business partner in our branch, we were sending out newsletters via mail, right? So they were actually printed out, but are they still relevant for today? What is if you could kind of crystallize it in a sentence or two, what is the value of a newsletter? What does it accomplish for a reverse mortgage professional?
Yeah, so I think it's totally relevant and worth it. For one thing, if you're using social media and other platforms for all of your marketing, you don't own any of that. You don't own any of the content. It can be shut down anytime. And with your email list, that's your list. And, you always have access to it, and you don't have that threat of somebody shutting you down unless you're spamming. Don't spam. And also, if people are continuing to open it, then that means that you're getting feedback, you're getting data as to what they're interested in. Click-through rates are really good when we send the newsletter, so that is helpful if you have something for them to click through to. And you're having direct access to their inbox as opposed to chancing it that they're going to see something on social media that you posted. So I think it's definitely relevant and totally worth it.
Excellent. And just in closing, can you share one client success story that that kind of originated from your, pardon the pun there, from your newsletters that they're using?
Yeah, so I would say the client that I've had the longest, she and I have been working together for like 13 years. A lot of people know her, Linda Weiler. She gave me permission to use her name.
Thank you, Linda.
And she's been building her list for all these years. I've helped her build her list, and she literally gets phone calls the minute she sends it out. And so it's, she'll text me and say, I just got 5 leads, 2 emails and a call. And, so I know it's working for her. She says that it's her number one marketing tool, and it's just been working for her. And I have other stories like that from loan officers. And I will just put in the disclaimer that it's taken a long time to build that list, but she's been having this kind of success for many years now. So it took a couple years to build, but she's just really continued to build on it and get even more leads.
So it took time, obviously, to build the number of contacts that she's going to be emailing and communicating with.
Exactly.
Well, Claudia, on the screen, we're just going to leave some information. I'm giving you a little free plug here on
Thank you.
WordFlirt, yes, because I believe it brings value to our listeners and viewers of our podcast, and that's what we're here for at HECMWorld. So, Claudia, thank you so much for letting us know a little bit about what you do. I think it's highly valuable, and I think it's also, even though it's digital, it's very relational. So thank you.
Thank you, Shannon. I really appreciate you, and I love your podcast.
Thank you very much. Cheers.
Cheers.
If you have any borrowers who are living in the areas that were impacted by the LA Palisades or Eaton fires, you're going to really want to take note of this first story. Last week, California Governor Gavin Newsom announced that The Cal Assist Mortgage Fund will be launched on June 12th, and I'm just going to give you a quick look here at the website. So I recorded this segment on Wednesday, June 11th. That's why it's saying one more day, because the launch date is in fact on the 12th of June. So anyone that's been impacted by those fires or disasters can go ahead and get online and apply. Now, the program is going to provide grants that cover up to 3 months of mortgage-related costs, up to a maximum of $20,000. Now, the good news is that this program explicitly is available for reverse mortgage borrowers in addition to traditional borrowers. So while HECM borrowers do not have any required monthly payments, as we know, they do pay ongoing property charges such as property taxes, homeowners insurance, flood insurance, HOA dues, or maybe they have an escrow account that's overdrawn or in arrears. The Santa Monica Daily Press notes that this program is designed to provide what is called a financial bridge to recovery for those that are struggling with mortgage payments while their homes are uninhabitable or have been completely destroyed. So the qualifications are actually quite broad in the disasters that are covered. In fact, the story notes that eligible disasters include the 2025 LA wildfires that we saw, the Park Fire, which was last summer, which started in Butte County, just outside of Chico, and the Tehama and Plumas County fires. But they also must meet the program's income limits. And here are the income limits for the Cal Assist program to get these grants. Your household income in LA County, which we're going to speak to specifically today, must be below $140,700. Now, here's the good news from Reverse Mortgage Daily. Our largest servicer, which is C-Link, is already on the ball when it comes to this. They are a servicer and subservicer, and they are participating directly in this program, and they have plans in place to notify those impacted customers, that according to Ryan LaRose. So what they're doing is they are launching an email campaign and also outbound phone calls to ensure that these impacted homeowners are aware and do get their filing in as soon as possible, because, again, it's first come, first serve. Once these funds are gone, then that's it. So we want to make sure they get in within the window of opportunity. Also, Finance of America is preparing to contact those that are those loans that are being serviced that are in those impacted areas. So that's good news as well. Housing Wire's Reverse Mortgage Daily reports that Tom O'Donohue, who is with Reverse Loans Now, has several clients that were impacted by those recent wildfires in LA. And O'Donohue said the program needs more exposure, but it is encouraging to see Reverse Loans finally get some support in California regarding disasters. And he adds that he has a friend who can benefit from this particular program, the grant program, and we'll reach out to him. So I had a few questions about this, so I gave Tom a call and asked about how he expects borrowers to receive funds, and he relayed that he expects that those with overdue property taxes may be able to find relief in the program. So we're going to be following up under which circumstances that reverse mortgage borrowers have received grant assistance through this program, and we will bring that to you in a future episode. Money Talk News reports that thousands of federal employees are now being asked to return to work after they were suddenly laid off by the Department of Government Efficiency, or DOGE. And as we've reported earlier here at HECMWorld, HUD was certainly one of the agencies that was heavily impacted by those wide-ranging staff cuts made earlier this year. In fact, at HUD, over 30 field offices faced major staffing gaps, and 13 were left with 2 or fewer employees. That's incredible. And that forced some reassignments of remaining staff to cover disaster responses. Money Talk News reported on June 6th that the IRS, USAID, and HUD, and also the Social Security Administration saw big losses of their staffing, with some departments losing more than 40% of their staff. So let's look a little bit deeper as how this may impact HUD. Yeah, even the Weather Service is being impacted by some of these cuts. That's not good if we need hurricane forecasts, but let's take a look at this process. Now, bringing in these workers back into the fold, so to speak, is not as easy as one would think. In fact, some of those laid off have already accepted jobs in the private sector. But even those who do return describe a broken system and morale that is extremely low. One worker at the FDA said that the office feels like a funeral. That's certainly sad. But let's look at the impacts more specifically to HUD's field offices. They also report that internal documents revealed that over 30 HUD field offices are facing severe staffing issues. That is a crisis, and some supervisors have been left with no one to supervise at all. And last week, the Washington Post reported that the Community Planning and Development Department, that's one of HUD's departments that responds to wildfires and hurricane victims and administers billions of dollars each year in grants. Well, they are especially strained. That is not good because we are just coming into the hurricane season for Florida. That begins this month and runs all the way through October or early November. The Post also reports that at HUD, some offices saw so many people take the early resignation offer or the buyout that officials are now looking to redeploy staff to cover those absences, more specifically in the Department of Community Planning and Development. Now, they respond to wildfire and hurricane victims, and each year they administer billions of dollars in grants. But now that department's especially strained. That is not really good timing because we just started officially this month the hurricane season for Florida, which has been seeing increasing hurricane activity. And that season is going to run through October or November. So the field office operations, they have seen 13 field offices that have 2 or fewer employees, just as we saw in the other report. That, according to an internal presentation of May 27th that was obtained by the Post. So more than 30 field offices have broader staffing concerns. But what happened to the 300 HUD employees that were reinstated based on an order from U.S. District Judge James Bradar? That was from a temporary restraining order, and it was an order against the firing of the probationary employees. Those are the employees that have been at HUD for less than a year. So what have they done? Well, here's what happened. The agency kind of did an end run around this order. And what they did is they technically complied by placing the vast majority of those 300 employees that were laid off. Instead, they put them on paid administrative leave. So they're still collecting their salary, but in the end, they only fully hired back 13 employees. But we may not be out of the woods yet. In fact, the government executive reports that there are more planned slashes to the federal workforce next year. So reviewing this, of most interest to me was this chart. And the report from the executive shows that there's a planned 26% reduction in the workforce of HUD in 2026, fiscal year 2026. Now, of course, that's barring any judicial intervention at the appellate level. Now, to date, thankfully, HECM operations appear to be generally operational, but many HUD staffers are still in limbo and they're on paid leave, but they don't have any clarity when or if they're going to return to work. But as a result, many HUD staffers are still finding themselves in limbo on paid leave, and they have no clarity when it is that they actually will be returning to work. So the future of these employees is really going to depend on further legal decisions at the appellate level.